One thing we can all agree on is that the cryptocurrency space is not lacking drama. Over the weekend, USDC depegged from its $1 price tag, going as far down as 33 cents against the US dollar on Binance. This is, of course, on the back of the Silicon Valley Bank going under. So let's look at what this means to the market now, as Bitcoin investors are essentially at their breaking point. Many believing that the market must go back under $15,000 for Bitcoin. But of course, we continue to see the market hold up at key levels. So what is it going to be? Let's find out where the breaking points are for the market this week as we cover the depeg on USDC, look at the stock markets, the US dollar, Bitcoin, and of course get into some Ethereum as well. So if you haven't already, make sure you do smash up that like, subscribe to the channel. This is your home of macro cycle analysis, where we cover everything from cryptos, the stock market, and the biggest of them all, the real estate market. Okay, guys, let's start with some of the breaking news over the weekend. Circle issuers are looking to peg the US dollar stablecoin again. So briefly, what's happened? The stablecoin USDC is no longer $1. Circle, who is the issuer of USDC, says that they will stand behind USDC and cover any shortfall, meaning that it's almost a sure bet to be buying USDC now and then looking for this market to regain its $1 peg back here, which is about 3.5% down from where it currently is. This is what many investors, traders more so, have been doing over the weekend. You can see USDC against Tether on Binance got as far down as 82 cents, currently at 95.5 cents. So buying USDC now with UST could maybe get you 4.5% return if this in fact does come back to the peg. That is what the company has said, but like we know, what the companies say and what they actually do could be two different things, which is of course leading the entire market to breaking points, with the bears coming out in full-fledged attack over the last few days. Yellen rejects Silicon Valley Bank bailout. So this is where the crisis started, with Silicon Valley Bank. Now, only a small fraction of USDC was actually held with Silicon Valley. However, I believe this news is still trying to circulate to the masses, as many believe that the connection alone is what could make USDC fail. But on different calculations, somewhere between 2 and 8% is held with Silicon Valley, which of course has gone under. So we don't know whether they're going to get a payout of this 2 to 4%, but nonetheless, what Circle has said is that they are going to cover any shortfall that is remaining for USDC. So as that comes to light, more news comes out, we could probably or possibly see the USDC peg return back to $1. This, of course, has led to more fear in the market, which is a fantastic time for traders because we are getting extreme volatility. And if you are interested in trading, here's a shill to our own trading groups. Link is in the top of the video description here. Get trading now with our free trading strategies. Check that out if you are an experienced trader. Don't go and get yourself wrecked. We've had some great profits over the last few days, as well as guys have gone from shorting the market to now longing the market on this bounce. So well done to these guys here, making extra profits as well. So with the fear at this point, this is the exact level that we've been watching for the fear and greed to come back and retest. Essentially, it's a reading of how fearful the market is compared to the price. Right now, we are seeing it. We saw it just break out, and right now we're seeing it come back to retest the downtrend. Now it's a squiggly line there, but essentially you can see that the market has broken out and is coming back. We're looking at a zone between 30 and 40 as a reasonable place to find a low on the market sentiment. So we've got to keep track of what's going on in the price. Now, if we look to the bottoms here, the bottoms are still getting higher. This isn't always going to be the case because, of course, this reading only goes between 0 and 100. So we have to just read it in relation to what's going on now for this particular analysis. And then, of course, we can always look back to see when were the most extreme times, what has happened at some of the turning point times, and then, of course, the other extreme times to the upside. So in terms of the downtrend, you can see that we've come back to test that. That was pretty much likely, especially after we got the rejection at around 60, the other level that we were looking at, because what's happened in the past, is that we've seen some rejections at these 60 levels. So it's yet to be seen whether we do hold out at these higher lows or come back a little more, but still hold out at a higher low above the June level, which has been a key bottom for BTC at that 17.5 level. So right now, this is all going to plan in terms of market sentiment because of the news that has come out. The market has obviously got more fearful. This is going to change today. We're at 33 right now. We've got a few hours to go. So let's keep track of this and see just how far the market sentiment drops after the weekend and after BTC pumping. And of course, the most important one here is the S&P 500. We have had some extreme days, bears taking control, big news of banks failing and other companies that people had never heard of before until this announcement. So keep that in the back of your mind as we go into this week and next week with some more of the Fed announcements that are coming up, interest rate announcements, and other meeting news as well. Right now, though, in terms of the price, just the facts on the chart right here, we are still holding above the 50% level, previous support levels back in December, which I have here as first support. You guys would have seen this on the chart already. And then we're still above the cycle low of October and the second support level here of 3,600. So basically, we're still above 3,500, 3,600, 3,800, currently sitting around that 3,900 point level. But these are key levels back here on the chart. But the news and the sentiment out there, especially across crypto finance, Twitter, and crypto YouTube, and anywhere else that you can see crypto or the markets, you would have thought that the market would have at least broken down from the December low by now, which is a very key area on the chart at this point, and also possibly broken down from this level with how extreme the noise has been around the bears. Now, of course, the other side of the story is this is just getting started. Just wait. We'll see what happens. But what I'll leave with you here in terms of reading the data is that if we don't start to see some breakdowns of these key levels, especially with extreme news and extreme market sentiment, it's going to be much more difficult to break lower prices if there isn't the extreme fear around. It is pretty much that simple. To get people to sell, there needs to be something extreme there. And if we lose that momentum of the extreme news and the extreme noise and the fear, we're going to lose momentum of the downside pressure. So let's continue to watch these key levels on the S&P, on our major stock markets, the NASDAQ, the Dow Jones, and also check out what is happening with the US dollar. Now, as the week closed out last week, we got to fall back under the key resistance levels of around that 105 level. We still haven't completely broken down from 104 yet, so maybe we're just building another cause here to then pump and try and test some of these higher prices. Nonetheless, the view still remains that this is a bear market and this is a rally in a USD bear market. So essentially, this is the rally that is anticipated from this pretty big decline in the US dollar. That leads us over to Bitcoin, which right now we're still about 3 hours out from the weekly close. But starting with the daily here, this was the extreme news here. This was Thursday, 9th of March. This was the day that we heard more about the Silicon Valley Bank collapsing. This day here on the 3rd of March was the Silvergate collapse, approximately 4.5% on the day, but the total bar itself somewhere around 6.3. So the day on Thursday, we had a top to bottom of about 9%, but the overall loss within the day after we closed up a little higher was about 6.2%. So far, today's bar on the index, which is a total of all of the other markets out there for the Bitcoin price, this has actually just exceeded the top of that extreme fear day. This, I want to see it close above these levels. Anything closing above 22,000 is going to be a key level for the bulls. Now, we have seen some extreme volatility coming in from this particular low with some reasonable volume as well. And of course, anything can happen leading into this close. But if we do start to see the close at around these levels, especially above the 50% level with this higher close, that bearishness, that extreme fear that we experienced over the last 48 to 72 hours may, in fact, just be a whole ton of hot air. I might be getting in there a little bit earlier with my opinion, but in terms of the chart, what we want to see in terms of the facts themselves is a nice solid close above 20,368, call it 20,400. And then if we start to close above these swing bottom levels here at 21,370, so basically 21.4, two easy numbers to remember, 20,400, 21,400. This is going to make the downside, that brutal attack to the downside, seem like it was all just water under the bridge in a few weeks' time. I'm going to hold my horses. I hope you do the same thing and not get too swept up in the emotion and commotion of what's going on in the market, because we still have not opened the week yet in the stock markets in the US. So let's see what happens in terms of what the banks are doing there. But nonetheless, this is a good early sign for now. 3 hours to go. Let's get a close on the market first before we can start to really piece together the next few weeks. That's the best case scenario for the bulls right now. For the bears, the best case for them is to get this market to dump, close below $20,300. A close below $20,300, which is essentially this area right here. This is what they want to continue with the weakness, just like what we were talking about with the S&P 500. Now, of course, like I said, this can all change once the markets open in the US, which is another 24 hours from now, and we start to see markets fall under and any closes here. This is what the bears need. The bears must get this to continue pushing these markets down and potentially go into another major spiral to the downside. So they're all if scenarios for the bears. For the bulls right now, this is the best case scenario that they could have hoped for after such a brutal attack on Thursday and Friday with Circle and with the Silicon Valley Bank, and on the back of the Silvergate Bank collapse as well. This is basically turning out to be one of the best case scenarios for the bulls. Like I said, still a few hours to go. I need to really hammer that home because we have seen extreme volatility within the hourly bar here. ETH is also experiencing some very strong moves to the upside after hitting dead on 50% with those extreme bars Thursday, Friday, both closing above 50%, which is above $1,400. They've also taken out the extreme noise news day of the collapses here from Silicon Valley Bank. This was the Thursday the 9th. The top was 1546. The market is now at 1552. 3 hours to go for a close, but the top has broken that top there. So from what the market is telling us, not just my opinion, which I often will give you at the end of the video, but the market is telling us that it is finding some strength and just beginning to shrug off all of the noise of the last few days. The bears have really got to get back on that brutal attack to crush these markets if we're going to see some lower prices. But for now, while we hold up here, this is still the June low. This is the FTX collapse low. And now we could say that this low, because we have had at least short-term reversal, this is the bank collapse low as well. Now, we shouldn't get too far ahead of ourselves because for Ethereum, it's still underneath its logarithmic downtrend as well. But at least in the short term, it's starting to put in some higher lows on the back of some really serious news. And if you want to be putting in some higher lows in your trading accounts, this is my dad joke segue to our free trading strategies. Link is in the top of the video description. Make sure you have some trading experience there to get involved and access our trading strategies using the Gann swing indicator and some of the technical analysis that I show you on this channel. Otherwise, join us for our free crypto and economic report coming out this week. That's going to cover a lot of what's going on right now. Smash up that like for pretty much one of your only macro bulls left in the entire market, myself. And I'll see you guys at the next video. Until then, peace out.